Hi, this is Ken. Let me start with the conclusion first. Tesla didn't drop because the earnings were terrible. Tesla dropped because the market didn't know how to think about Tesla anymore. And the rebound that followed wasn't about numbers either. It was about a story. In this video, I want to help you understand why Tesla fell, why it bounced back, and what that actually means for long-term investors like us. Not from a headline perspective, but from the way global markets and media really think. If you stay until the end, you'll be able to answer one critical question for yourself. What kind of company do you believe Tesla is today? Tesla released its 2025 Q4 earnings recently. Right after the announcement, the stock sold off sharply. Then, just one day later, it rebounded strongly. Same earnings, completely different market reactions. So, what actually happened? First, let's briefly organize the facts without emotion. This quarter, Tesla reported something it had never shown before. Year-over-year revenue declined. Profit also fell significantly compared to last year. From a traditional earnings perspective, those are not great headlines. But at the same time, there were several important positives. Tesla disclosed for the first time that FSD subscriptions have reached 1.1 million users. The energy business continued to show strong margins, and Tesla announced a roughly $20 billion investment plan looking toward 2026. So this wasn't a clearly bad quarter, and it wasn't a clearly good one either. It was a mixed earnings report, and that's exactly why the reaction became unstable. Now, this is where things get interesting. The real story wasn't in the numbers themselves. It was in how those numbers were interpreted by overseas media. Global coverage split very clearly into two camps. On one side, you had the traditional, more pessimistic narrative. This view treats Tesla primarily as an EV manufacturer. From that lens, the story sounds like this. EV growth is slowing. Revenue is declining. Heavy capital investment creates short-term risk, and brand momentum may be weakening. If you believe Tesla is mainly a car company, this quarter looks disappointing. And honestly, that reaction makes sense. But on the other side, there was a completely different interpretation. This group doesn't see Tesla as an EV company at all. They see Tesla as an AI, autonomy, and robotics platform. From that perspective, short-term revenue softness matters far less. What matters is long-term positioning, FSD adoption, energy margins, and the willingness to invest aggressively into the next phase. In this narrative, the quarter isn't a failure, it's a transition. And here's the key point I want you to remember. The market wasn't arguing about the numbers. The market was arguing about what Tesla is. That disagreement didn't just stay in the media. It flowed directly into the stock price. Right after earnings, the market reacted in the most predictable way possible. Algorithms and short-term traders focused on revenue decline, profit drop, and capital spending risk. The stock sold off hard. At that moment, the market chose numbers over narrative. But that wasn't the end of the story. And this is where Tesla, once again, behaves very differently from a normal company. And then something changed. After the regular trading session ended, a new piece of information entered the market. It wasn't an official announcement. It wasn't even a confirmed decision. It was a report suggesting that Tesla and SpaceX were, at least internally, exploring the possibility of a deeper integration. And suddenly, the market's mood shifted. Now, before we go any further, this is important. This was not confirmed news. There were no official statements. Nothing had actually been decided, but the market reacted anyway. So the real question is not, will Tesla and SpaceX merge? The real question is, why did the market care so much about the possibility? The answer is simple. The market didn't buy Tesla because a merger might happen. The market bought Tesla because the story suddenly made sense again. For a moment, investors stopped looking at Tesla as a standalone car company with weak quarterly numbers, and instead they started looking at Tesla as part of a much larger ecosystem, an ecosystem where AI, autonomy, robotics, space, and infrastructure all connect. Think about it this way: Tesla brings real-world AI, full self-driving data, and humanoid robotics. SpaceX brings global connectivity, launch infrastructure, and long-term technological ambition. And the underlying AI layer connects everything. When that picture appears, even briefly, Tesla stops being valued like an automaker. It becomes something closer to a platform. That shift in perception explains the price action perfectly. Right after earnings, Tesla was sold on numbers. After the rumor, Tesla was bought on narrative. And where did the stock settle? Around the low $430 range. Not back to pre-earnings optimism, but clearly above the panic lows. That price level tells us something very important. The market hasn't made up its mind yet. Right now, two forces are in balance. On one side, investors who see declining revenue and want caution. On the other, investors who see long-term optionality and are willing to wait. That tension creates volatility, sharp moves, and emotional reactions to every headline. So, how should we, as long-term investors, think about this? I don't believe this is about predicting whether Tesla goes up or down next week. And I don't think trying to trade every headline makes sense here. The real decision is much deeper. You have to decide what Tesla represents in your portfolio. If you believe Tesla is primarily an EV manufacturer, then this earnings report is a warning sign. Margins matter, growth matters, competition matters. But if you believe Tesla is evolving into an AI, autonomy, and robotics company, then this phase looks very different. In that case, volatility isn't a threat. It's part of the transition. From a long-term perspective, what we're seeing now feels like a repricing process. The market is slowly shifting from valuing Tesla on what it has already proven to valuing Tesla on what it might become. That process is never smooth and it's never comfortable. My personal view is this: Tesla is entering a phase where quarterly numbers alone will no longer tell the full story. The company is becoming harder to categorize, harder to model, and harder to explain in a spreadsheet. And that's exactly why opinions are so divided. Uncertainty creates instability, but it also creates opportunity. So, when you look at this quarter, don't just ask whether the earnings were good or bad. Ask yourself a different question. What kind of company do you believe Tesla will be 5 or 10 years from now? Because your answer to that question determines how you experience moments like this one. That's all for today. Thank you for watching until the end. If this analysis helped clarify your thinking, I appreciate your support. And as always, let's keep enjoying life with Tesla and thinking long-term about the future we're investing in. I'll see you in the next video. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.